Candlestick pattern. Here we will discuss on each candlestick in details. First is Marubozu. It means bald or shaved. It's a type of candlestick that's having only body and no wick. Now let's see how it's forming. First it's opening and thereafter only going up and closing at highest point of the day. It's a bullish candle and showing bulls are in full control. Now let's see the bearish one. First it's opening and thereafter only going down and closing at lowest point of the day. It's a bearish candle and showing bears are in full control. Now let's see what is opening Marubozu. Here after opening price goes up, then it fall and close at some point lower than high. You can see a wick above the body, and it's a sign of resistance near the top of wick. It's opening Marubozu, as the opening at bottom having no wick. It's a sign of bull in control but up to certain level, as also showing weakening in bullishness. Here after opening price goes down, then it bounces and opened higher than lower point, creating a wick below indicating support. It's opening bearish Marubozu, as the opening at top having no wick. It's a sign of bear in control but up to certain level, as also showing weakening in bearishness. Closing Marubozu. Here after opening initially price goes down, but the bounce and make new high, and closes at highest point with no wick above, showing a sign of support below with wick. It's called bullish closing Marubozu. Here initially bears were active but later bulls took control and pushed price higher. Bearish closing Marubozu. Here after opening initially price goes up, then dip and make new low, and closes at lowest point with no wick below, showing a sign of resistance above with wick. It's called bearish closing Marubozu. Here initially bulls were active but later bears took control and dragged price lower. Now we will discuss about Doji. It's an indecision candle. Doji means the same thing. It shows indecision in market between bull and bear. Let's see how a Doji forms. After market opening, price goes up and down but finally closing in same place as opening. A candle with no body at all and only wick, showing the conquest between bulls and bears and end up with indecision in market. In such case we need to check volume for further conclusions. Now let's see what is long-legged Doji. After market opening, price goes up and down significantly but finally closing in same place as opening. A candle with no body at all and only long wicks, showing the conquest between bulls and bears and end up with indecision in market. This is also sign of volatility in market and significant trading activity. The 4-price Doji is a very uncommon candlestick pattern, where the open close high and low are equal, or very similar to one another. As such it appears as a narrow horizontal line on the chart. This occurs during low liquidity or circuit in market. We will discuss that in details during our later videos. Spinning top is a short body short wick candle. It occurs when buyers and sellers balance each other out, resulting in closer opening and closing price levels. It is a one-candle reversal pattern that signals uncertainty in the market, and is preceded by either an uptrend or downtrend. Now we'll discuss about some special Doji candles. First one is Dragonfly Doji. This price action means after open, bear tried to pull the price down but later bulls countered and able to close near high. This is sign of bullishness. Important to notice which phase of price action or chart this is occurring. Might sign reversal. Gravestone Doji. This price action means after open, bulls tried to push the price up, but later bears countered, unable to close near low. This is sign of bearishness. Important to notice which phase of price action or chart this is occurring. This might sign reversal. Now let's understand the importance of Doji. Dojis are important sign in price action. Based on positions of charts they are occurring, they gives indications on probable future price actions. We'll discuss that during detailed chart and price action videos. Now we will discuss about some reversal candles. First one is hammer. This pattern is formed when the price opens lower than the previous day's open, then goes down significantly during the day, but closing near above the opening price. This indicates that despite initial selling pressure, buyers have stepped in, then pushed the price up before the close. Next is hanging man. This pattern is formed when the price opens higher than the previous day's close, but then drops significantly during the day, then closing near or below the opening price. This signals that buyers were initially strong enough to push the price higher, but sellers ultimately dominated, dragging it back down. Color of candles doesn't matter, it's important where it's forming. Now, inverted hammer. This pattern is formed when the price opens lower than the previous day's open, but then goes up significantly during the day, but closing near or above the opening price. This indicates that despite selling pressure, buyers have stepped in to push the price up before the close. Now, shooting star. This pattern is formed when the price opens higher than the previous day's open and goes up significantly during the day, but closing near or below the opening price. This indicates that despite initial buying pressure, sellers have stepped in to drag the price down before the close. Color of candle doesn't matter, it's important where it's forming. Like to share this matrix, which will help to understand the implications of these 4 patterns of hammers, hanging man and shooting stars clearly. First is hammer. It's a bullish pattern. This pattern is important when formed during a downtrend, can sign bullish reversal. Next one is inverted hammer. It's too a bullish pattern. Important when formed during a downtrend, can sign bullish reversal. Now the hanging man. It's a bearish pattern. It's important when formed during an uptrend, can sign bearish reversal. Last one is shooting star. It's too a bearish pattern. It's important when formed during an uptrend, can sign bearish reversal. These single candlesticks patterns are foundation to study multiple candlesticks patterns, and then chart patterns. We will discuss about them in our next videos. These basic ideas will become helpful during that study. Thank you for watching. If you like this video, please like, share and subscribe the channel. We will meet again in next video of part 2 of this series, where we will discuss on multiple candlestick patterns.